Bitcoin, what are you playing out? You're not behaving as you should. The confidence in Bitcoin is not coming into the market as you would maybe anticipate with all the world climate of what's happening right now. So we need to reevaluate of what is a potential alternative wave count of the psychological mood of the price action of Bitcoin, of everyone participating. Should we expect it to have a reversal or should we see it roll over and more downside movement? Well, that's what we're going to look at in an objective, non-emotional fashion based on Elliott Wave and Fibonacci. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Well, this is the wave count that we've been looking at for a while. And everything was pointing towards this as the high probability wave count. 2017 wave 1, a long complex correction, and then a 1, 2, 3, 4, 5 of a potential wave 3. Now, because this part of the market was very impulsive, it didn't look like a finish of a wave 4, and it looked like a potential just a wave A, B, and a potential C. However, with Bitcoin right now, it's not behaving in the sense of the optimism's not coming in, the buying's not coming in, the alternative of the dollar is not flooding and flocking towards Bitcoin right now. So what I want to do today is stand back and then reevaluate the market. So I'm going to jump into a new chart. We'll jump into a new chart, and here's the new chart, right? Here's the new chart. Fresh eyes. And we're going, okay, if we're looking at this again, no bias, just looking at this, what are the other potential wave counts? Well, the big concern, the question I have that we might have to make an exception for is this was very impulsive, right? Very impulsive to the upside. Now, what that meant for this part here, this looks like an impulsive sequence, as in there's no overlapping waves, almost like a 5-wave sequence. And that's not typical of an end of a correction, right? And that's why we're leaning towards the other wave count. However, looking at it again, and especially what's happening right now, and we're not getting that follow through with Bitcoin, what else could be the psychological mood of the markets? So how I'm seeing it is this there's a wave 1 and a wave 2. But as opposed to this being the wave 4, as in wave 2, and then wave 4 over here, what's more likely? This will make sense when I bring it all together, is that this is a 1, 2, a wave 3, and then a wave 4, and then a wave 5 of a 3. You go, what, Jagir? If you're not familiar with Elliott Waves and doing the counts and the rules and the guidelines, I've actually created a free Elliott Wave and Fibonacci Masterclass. It's in the link below. As soon as you click the link, it'll look like this. Just click on, without the drawings, obviously. If you scroll down, there's 2 masterclasses. The one to focus on is the free Elliott Wave and Fibonacci. When you click on it, it'll take you here and you'll get instant access. And I just cover the very high level of what we're talking about. So again, we're looking at this over here. Again, potential wave 1, potential wave 2. We're looking at this as a potential wave 3. So the breakdown of a wave 3, because waves break down into microwaves. So you got your macro, and then you got waves within the waves, and then you got waves within those waves. And we want to be aware of that. And we're looking for the psychological mood. So now looking at it with fresh eyes, based on what's happening right now and how it's not playing out, this may look like an unusual fall. We have to kind of, it hasn't really broken the rules other than the fact that it's not an ABC correction. It's not a corrective structure because of this impulsive move. Other than that, this holds true for a wave 4 and then a potential wave 5 of a wave 3, right? A wave 5 of a wave 3, as in a microwave 1, 2, 3, 4, 5 of a wave 3, right? That's what we're talking about here. So now looking at that, okay, if this is the accurate count, what that means, and now if I just delete this, that then means that this will be the first leg down of a potential wave 4. And then we should anticipate an ABC of a wave 4, and then a final leg down to complete a wave 4. So then the wave count will be 1, 2, 3, 4, and then a continuation to the upside. Looking at it now, this looks like the wave, the accurate wave count, or the most likely. Because how I look at charts is I look at like a patient, and the patient has a psychological personality, and the personality is reflecting behavior. And what we're looking at is the buying and selling behavior of the millions of participants when it comes to Bitcoin. And right now, the technicals, from a technical standpoint, we do not have follow through. And what I mean by that is, we had this movement to the upside, a little movement to the upside down here, and then we didn't get this follow through, right? We haven't had that. The price is communicating the mood, and the mood is looking weak, and it looks like it's probably going to make another lower low, and we're going to talk about that in a second. Again, and what we're aiming to do here is be unbiased, right? So if you're invested in crypto from a technological standpoint, from a micro cap IDO standpoint, even the top 100 cryptocurrencies, we do know that if Bitcoin does really well, everything else tends to do well. It brings this optimism to the market. But if we can pull that to the side and say, look, we're unbiased and we're just looking at the psychology of the market and the buying and selling behavior. So I've done a couple of things here. I've drawn it earlier. I'm just going to unhide it here now. Now we can see, I'm just going to minimize myself slightly as well, right? So now what I've drawn here is a few things, right? And we want to talk about this. So this looks the same as before, right? What's different is potentially, initially when I did my first analysis back in April, May, June on Bitcoin in 2021, we saw this as the potential end of wave 4 of the macro, like this being a macro 3 and a macro 4. But again, we're just worried about this. This is not typical of a correction, right? So we were looking at that. But now, if we can put that aside, because the alternative count is that this is a wave 5, but of a wave 3, right? I know if you're not used to Elliott Wave Fibonacci, I strongly recommend you pause, take the free Elliott Wave Fibonacci Masterclass, because I cover this in how to read the markets, the 3 key rules of Elliott Wave guidelines, one of which is that wave 4, if I can get rid of this, wave 4, which is this potential wave 4, should not trade into the former range of the wave 1. Because there's a big gap between the two, so it doesn't invalidate that count. And this one here is more of a guideline that this shouldn't be an impulsive structure, but we have to just look at it for what it is. And now if we are making a wave 4 over here, then this is the macro wave 1, I'm drawing with my mouse over here, that the price should not go below 20,000, right? 20,000, which is a 2017 high. All right, so we've got some red lines, some vertical red lines over here. Longitudinally, as my friend Hitesh would say, longitudinally lines over here. We're looking at, what are these 2 red lines? Okay, well, wave 2 over here, I was looking at this in the morning. This is what you refer to as a complex correction, right? Complex correction. Why is it complex? Well, it's not a typical ABC. That would have been a typical ABC, but it kind of overextended and it overlapping waves. And, it's just one of these complex corrections. When wave 2 is complex, wave 4 is typically simple. And the time taken for wave 2 to form, if it's complex, wave 4 should be shorter in time, right? Shorter in time. So what I've done over here is I've simply just measured this wave 2. How long did it take? If I just grab this, measured it over here, projected it forward from this potential wave 3 high, and that's what this red line is over here, right? So this red line over here is how long it took for wave 2 to form. So what this tells us is that if this is a wave 4 correction, then it should complete before this date. What is this date? This is November. So it's before November. I know November's far away, right? November's far away. But we're just looking pure technicals. Let's just remove bias, psychological mood, buying and selling behavior. So we should complete a wave 4 before November. However, we also want to take into account a wave 4 correction should be longer than any previous correction in the sequence. You go, what? Yeah. Okay, we're looking like we're forming a wave 4. If this ends up being the wave 4, something like this correction should take longer than any form of correction in the previous wave, which is this wave 3. What are the corrections? Well, the correction is this one and this one. This one is longer. So what we're going to do is we're going to measure it. How long did it take? Right? This is giving us valuable, objective, non-emotional information. Right? So again, we're going to use this tool. It's a powerful tool. It's called, what is it called? Trend-based fib time, right? So we're going to click on the top of this wave 1. Doesn't matter. It's more the vertical, the horizontal that we're focused on here. We're going to measure it, and we're going to project it forward from this wave 3. And that's what that second dashed red line is, right? This one over here. All right, so now this gives us very valuable information. So now it says July 29th, right? July 29th. Let's just make some notes on this chart because today's video is, it's kind of getting the thinking across. No one knows what's going to happen. We're just looking for a high probability outcome so we can plan and prepare in advance to take the best possible action for your entire portfolio. So let me just move my mic over here slightly. All right, so we're going to write, what did we say? We said November. I'm just going to move this chart over here. We said, let's just call it, let's keep it broad. Let's keep it broad. Let's keep it November. So wave 4 to end before November 2022. I know November's far away, so we're saying, and we're based on that on how long did the complex wave 2 from the end of 2017 to the end of 2018 take. It's almost 12 months, right? So we know it should be less than that. We're going to put it like that. We are also saying that the previous correction, the really one was the COVID correction, right? We're looking at this correction over here, this one over here. How long did this correction take? Well, it was from pretty much July 2019 to March 2020, right? So it's quite a long correction. But this wave 4, because it's a bigger degree correction than the previous correction, it should be longer. So how long did it take? Well, we just projected as we saw before, so it's July. So that means we should anticipate that the wave 4, I'm going to write here, wave 4 to complete after July 2022. You go, gee, that's still a long way away. We're in March, right? So we got March, April, May, June, July. So maybe 4 or 5 months of sideways to down. So now let's just be objective. Now we're being objective, non-biased, no cognitive dissonance here, or we're doing the best that we can. So now when we're looking at this and we move it like this, I've done some price retracements. So wave 4 is typically, if I just go into the course, when you do the masterclass, I'm just going to go into the course. Give me 2 seconds. When you do the masterclass, I cover some of these key ratios. And what you'll see, this is how you access the courses. Once you buy it, you have your own backend. You go into the library. We're just going to go into Fibonacci ratios. We're going to keep it basic. Stay on the foundation section. We're going to look at retracement for wave 4, lesson 5. And the key ratio that we want is really this one over here. 38 to 50%, right? Really, that's the key ratio. The absolute maximum is actually 62%. Not common, but is the absolute maximum. So when we go back to Bitcoin, what we've done over here, we've done it already. Literally just measured this wave 3 and did a retracement, and here's these 3 ratios. We've got the 38, 50, and the 62%. This one over here, I'll show you what I've done here in a second. What I was also looking at is, okay, this sequence to the downside, this sequence here to the downside, looks very impulsive, right? It's not a corrective sequence. And it's not clear what it is yet, but it looks likely we're going to make one more lower low. And if that's the case, what are the potential wave counts for this impulsive sequence to the downside? Well, it looks like quite a long potential wave 1, a wave 2, 1, 2, 3, 4, 5 of a wave 3. In this case, it looks shorter than wave 1, and there's a particular rule that we want to be aware of. This looks like some type of potential wave 4, or it could count it up here as a wave 4. And then a final leg to the downside. Final leg to the downside. Right? That's going to be a minor count. There's a minor already. Perfect. Right? There's a rule that says, I'm going to show you this. I'm going to show it like this. I'm going to go back into Elliott waves. The three key rules are, well, the one that we're going to focus on is this one. Wave 3 cannot be the shortest out of wave 1, 3, and 5. Now that can give us really valuable information, And I covered it in a bit more detail in the masterclass. It says over here, for this count to be valid, this wave 3 is actually shorter than this wave 1. And if wave 3 cannot be the shortest out of the 3, that means wave 5 must be shorter than this, right? And this is what this red line represents. So we should have a maximum of one final leg down. It might not be comfortable, and it won't be comfortable, but a 29,000 move to the downside, as in potentially 30,000 to 29,000 Bitcoin, thereabouts. So that's well, it says 28,700, right? So we should expect it to be higher than that. And we can do a few other things with candlesticks, etc., but this gives us enough information. And if this is the case, what I'm looking at is potentially a wave A, and then we'll go sideways to up for a wave B, and then a wave C of some sort to finish off what might be a wave 4. So here we have an alternative based on what's happening. Because another thing we're going to take into account is the top left-hand corner is the weekly momentum. Right, the weekly momentum. Forget the price for a second. Let's just look at these momentum indicators. The slow, which is the 13, is pointing up. But the one that we need to favor is the fast one, which is this one. Sideways to down. Now when the fast, the 8, this is called the 8. In the settings is 8533. When the 8 is pointing down like this, it says it's likely we're going to see a new lower low being made, right? A new lower low. So sideways to down. So we favor pattern over momentum, but when they coincide, that's valuable information. So it's likely we're going to see this low get taken out, and then getting above this range, so above the 28 or 29,000 range, that we're going to see this first leg of an A. And then I think we'll see optimism come back into the market, but we want to be aware that it's probably going to just be a correction, and then to finish off this move to the downside, something along these lines over here. And there's a few other things we can take into account, but this is where I'm just kind of getting my thinking across. So yeah, it's not looking good short term for Bitcoin. It's probably going to roll over in the sense of this low is not going to hold. That's the likelihood. And we're going to see a lower low being made in this region. But again, it's looking like this is very bullish behavior, but it could potentially be a wave 3, ABC of a wave 4 forming between July and November. So we might have 3 to 4 months. But keep this in mind also. The market often doesn't know, if we are making a wave B, this still would be 50 to 78% to the upside of this movement over here. So during this phase, I think we're going to get some brilliant market movements, which is only weeks away. So when I say weeks away, let me just do something basic for you, just because I know you like to have time frames. If I just measure this high to low swing, and then the next one down here, we could be talking about, 3 to 4 weeks to have this low being formed, this wave A, or this potential wave A, something like this. And then for this upward movement to occur. And that last thing, I'm just going to do some, again, I'm not going to go into detail here. I'm just going to Just gonna give you some broad dates. Broad dates. Sideways to up till June to June. So we're talking about a couple of months. We got April, May, June, like 3-4 months of sideways to up, which will add a lot of optimism to the market, but we probably won't exceed the all-time high. Well, more than likely, again, I'm really going a bit far ahead now. We want to let the market tell us what's happening. Final leg down, and then for what everyone that's in crypto has been anticipating will probably happen towards the latter part of the year, which is that 6-figure Bitcoin, right? So again, let's let the market play out. We don't want to jump too ahead of ourselves, but this is just a reevaluation of the market, because initially I was basing it more around this particular wave count, but this is now lower probability that is going to be this, taking a few new pieces of information into account, especially how the recent data is forming, and this will be my new take unless it's invalidated in some way. What would invalidate it? If it goes below this wave 1 of the 2017 high, which is unlikely but possible, then we need to reevaluate. If all of a sudden it shoots up and exceeds this high with confidence, this high over here, what we're calling a potential wave 3, that we need to reevaluate. But until either of those happen, this looks like what's going to be the likelihood. So how did you find that was slow and steady? That was calm. We're not looking to, it's just because what we're measuring over here is the psychological mood of all the participants betting on Bitcoin, up or down. You're betting up by buying and betting down by selling, right? And that's what we're doing. And Ralph Nelson Elliott, what he figured out in the 1800s and the 1900s was all markets where there's many players and many volume, many participants, has a mass herd psychology flow, independent of the fundamentals. And people are buying and selling based on that, where it gets overvalued, undervalued, profit-taking zones, etc. And he realized it was a 1, 2, 3, 4, 5-wave sequence, followed by a typical ABC correction, and then they repeat on the macro scale, intermediate scale, and the micro scale. And you can even zoom in a bit more. And what that allows us to do is look at the market with objectivity. Short term, the news can create different price fluctuations, but long term, medium to long term, weeks, months, years, the technicals hold true. So let me know how you found today's content. Like, subscribe, hit the bell notification. Let's finish on a quote. What quote we're going to go for today? I'm going to go with chapter 8, right? It's from my book. It's Henry Ford. It has been my observation that most people get ahead during the time that others waste. It has been my observation that most people get ahead during the time that others waste. I'm really focused on the next 2 decades, right? So we're talking about 20 years, right? The next cycle, so Bitcoin halving, occurs every 4 years, give or take, every 210,000 blocks. And each block takes approximately 10 minutes with 1 megabyte worth of data. And if you do 10 times 210,000, it approximately equals 4 years. So the last Bitcoin halving event, I believe, was in 2020. The next one's going to be roughly March 2024. Next one after that, 2028. And the bull cycle, even though it's dynamic, we're in a dynamic market, not a static market, meaning it's not fixed dates, it's not a fixed 4-year period, it's dynamic, it's expanding, it's contracting all the time. But we can get a bit of a ballpark feel for when the next bull run is going to be in the next one. So 2025 and 2029 are going to, in those time frames, are going to be major peak cycles more than likely. And we're in a very infant technology like the internet was in 1995. So the reason I'm saying that is to learn these waves, but not just for the next few days, weeks, and months. We're talking about years and decades, so you can get a real feel for what is the psychological mood and this buying and selling behavior for what we're seeing right now. So then, when preparation meets the opportunity, like when the two coincide, that's when you can leverage the information to favor you. So you got the edge and you become the casino. But we can only do probabilities and never certainties. So like, subscribe, hit the bell notification, take the free Elliott Wave and Fibonacci Masterclass. You'll get an invite to my private Telegram. We do workshops, we do weekend workshops. We did a brilliant one yesterday with some phenomenal questions. We did another one on Friday, and we had one on Wednesday, and we had one on Tuesday. It's for the private community. I've bought any of the courses just so we're speaking the same language. So you've done the basic training, and then it makes it easier for me. So let me know what you found most valuable. What do you think of Bitcoin? Do you think it's a way forward? Do you think it's going to be a bigger correction? Is it going to be a bigger, deeper ABC correction and go into the 2017 all-time high? But from my analysis, that's what it looks like. All right. See you very soon.